If you're watching this video right now, you're early. And I mean early, because today I'm breaking down 4 high-growth stocks that could absolutely explode going into 2026. And I'm talking about the kind of setups that don't come around often. The kind of stocks where smart money positions quietly, and retail only realizes what's happening after the run starts. Some of these stocks are operating in industries that are expected to grow hundreds of billions of dollars over the next few years. Some are sitting at valuations that make absolutely no sense when you look at where their revenue and technology are headed. And at least one of these stocks has the potential, yes, I said it, the potential to deliver 5x to 10x returns if the catalysts line up the way many investors expect. This is not a random list. These are high-growth stocks with real businesses, real demand, real catalysts, and real momentum building beneath the surface. If you care about positioning yourself before the crowd for 2026, if you're serious about high-risk, high-reward investing, and if you want stocks that could go parabolic over the next 12 to 24 months, then this is a must-watch video from start to finish. So don't blink, don't skip. Let's get into it. Before we dive in, real quick, let's set a goal on this video. If you find value in deep dive high-growth stock research like this, smash the like button. Let's aim for 500 likes on this video. It literally takes 1 second, and it helps this channel more than you realize. Make sure you subscribe if you're new here and turn on bell notifications, because I post high-risk, high-reward stock ideas like this consistently, and you don't want to miss what's coming next. All right, now let me say this once clearly. I'm not a financial advisor. Nothing in this video is financial advice. These stocks are high-risk, volatile investments. You must do your own due diligence before investing any money. I'm simply sharing research, opinions, and potential opportunities. Now let's talk stocks. Stock number 1, SoFi Technologies. Let's start this list with a stock that a lot of people think they understand, but very few truly do. SoFi Technologies is not just a fintech app, it's not just a student loan company, and it's definitely not just another digital bank. SoFi is quietly building an entire financial ecosystem. Lending, banking, investing, credit cards, personal finance, and even technology infrastructure, all under one roof. What makes SoFi different is vertical integration. They don't just offer products. They own the technology, the platform, the data, and in many cases, the customer relationship from start to finish. That is incredibly powerful, especially as traditional banks continue to struggle with outdated systems and rising costs. Now let's talk about the market opportunity, because this is where things get interesting. The digital banking and fintech market is massive, and it's still in the early stages of disruption. Younger generations are moving away from traditional banks. They want mobile-first platforms, faster approvals, better user experiences, and lower fees. SoFi is built specifically for that audience. Despite this, SoFi is still valued like a risky startup, not like a company transitioning into a profitable, scaled financial institution. And that's the opportunity. Over the last few years, SoFi has been growing members aggressively, expanding revenue streams, and tightening up its cost structure. We're seeing a clear path towards sustained profitability, which is a major inflection point for any growth stock. When a company moves from growth at all costs to profitable growth, Wall Street's perception changes fast. Valuations re-rate, institutions step in, and momentum builds. SoFi also benefits from interest rate dynamics in ways people don't always realize. As rates stabilize and lending demand normalizes, SoFi's diversified model allows it to capture revenue across multiple financial products, not just one. Now let's talk catalysts. Going into 2026, SoFi has several potential triggers that could send this stock significantly higher. Continued profitability quarters, expansion of its technology platform services, increased adoption of its banking products, and potentially even inclusion in more institutional portfolios as the company matures. Analysts have already started adjusting their expectations upward as SoFi proves it can grow responsibly. If revenue continues to scale and margins improve, this stock could surprise a lot of people who wrote it off too early. This is not a get-rich-tomorrow stock. This is a compounding growth story with serious upside if execution continues. And if fintech sentiment heats up again heading into 2026, SoFi could move fast and violently injure it to the upside. Stock number 2, Ionka. Now let's switch gears, because this next stock is not just high growth, it's next-generation technology. IonQ operates in the quantum computing space. And if that term sounds futuristic, that's because it is. Quantum computing has the potential to completely transform industries like artificial intelligence, cybersecurity, pharmaceuticals, logistics, and financial modeling. We're talking about computing power that can solve problems traditional computers simply cannot. IonQ is one of the few pure-play, publicly traded quantum computing companies. And more importantly, they're not just theoretical. They have working systems, commercial partnerships, and growing revenue. Now here's why this stock is so interesting. The quantum computing market is expected to grow exponentially over the next decade. Governments, tech giants, and research institutions are pouring billions into this space, but there are very few companies that investors can access directly. IonQ is one of them. Right now, the stock trades with massive volatility because the market doesn't know how to price early-stage breakthrough technology. But that volatility is also where opportunity lives. IonQ has partnerships with major cloud platforms, research organizations, and government entities. That gives them credibility, and it gives them a runway to scale as demand increases. Financially, this is still an early growth company. Revenue is growing, but profitability is further out. And that's okay, because this is a technology adoption curve story. If IonQ continues to demonstrate progress, secure contracts, and improve performance metrics, the narrative around this stock could change dramatically. The biggest catalyst for IonQ going into 2026 is validation. Validation through partnerships, validation through commercial use cases, validation through technological milestones. When the market begins to believe that quantum computing is moving from future promise to real-world application, stocks like IonQ can reprice extremely quickly. This is not a safe stock. This is not a conservative investment. But for high-risk, high-reward investors, IonQ has the kind of asymmetrical upside that can define a portfolio if it hits. Stock number 3, Upstart Holdings. This next stock is one of the most controversial names in the entire growth space, and that's exactly why it's on this list. Upstart uses artificial intelligence and alternative data to assess credit risk. Instead of relying purely on traditional credit scores, Upstart's platform analyzes a broader set of variables to determine borrower quality. In theory, this allows lenders to approve more borrowers at lower default rates. In practice, the stock has been absolutely destroyed over the last few years. Why? Macro conditions, rising interest rates, risk-off sentiment, concerns about loan performance. But here's the key point that many investors miss. Upstart is not dead. The technology didn't disappear. The demand for better credit assessment didn't vanish. The company has been in survival mode, cutting costs, tightening standards, and waiting for macro conditions to improve. Now, heading toward 2026, the setup changes. If interest rates stabilize or decline, if credit markets loosen, if lending demand returns, Upstart is uniquely positioned to benefit from that shift. This is a classic beaten-down growth stock with operational leverage. When volume comes back, revenue can scale quickly because the platform is already built. Upstart also continues to refine its AI models, expand into auto loans, and explore additional verticals. That diversification reduces reliance on any single lending category. The valuation today reflects extreme pessimism. The market is pricing in a scenario where growth never returns. That's rarely how these stories end. If even part of Upstart's original growth thesis reemerges, the upside from these levels could be massive. We're talking about a stock that doesn't need perfection. It just needs normalization. This is a turnaround plus technology play. High risk, but potentially explosive if sentiment shifts. Now let's talk about space. Rocket Lab is one of the most exciting small-cap space companies in the public markets. They design and launch rockets, build spacecraft components, and provide end-to-end space solutions for commercial and government customers. This is not science fiction. This is a real business with real launches and real contracts. The space economy is growing rapidly. Satellites, defense applications, communications, Earth observation. Demand is increasing, not decreasing. Rocket Lab operates in a niche that sits between massive players and startups. They offer reliable, cost-effective launch services and are expanding into more complex missions. One of the most important aspects of Rocket Lab's story is vertical integration. They don't just launch rockets, they manufacture components, build spacecraft systems, and offer mission services. That increases margins and creates recurring revenue opportunities. Financially, Rocket Lab is still in growth mode. Revenue is increasing, investments are being made, and profitability is a longer-term goal. But the valuation reflects skepticism. And again, that's the opportunity. Catalysts going into 2026 include increased launch cadence, new government contracts, progress on next-generation vehicles, and expansion of space systems revenue. Space stocks tend to move in cycles. When sentiment turns bullish, they can move very fast. Rocket Lab has positioned itself as a serious player. Not hype, not memes, but execution. If space investment accelerates and Rocket Lab continues to deliver, this stock could surprise a lot of people. So there you have it. 4 high-growth stocks to buy now for 2026. Each with a completely different risk-reward profile, each operating in a massive market, and each with catalysts that could send them significantly higher if things line up. Now I want to hear from you. Which stock on this list is your favorite? Which one do you think has true 10x potential? And if you had to rank these 4 from best to worst, how would you do it? Drop your thoughts in the comments. I read them all, and remember, none of this is financial advice. These are high-risk stocks. Always do your own research. If you enjoyed this breakdown, hit that like button, subscribe to the channel, and follow me on X for real-time market thoughts. The opportunity is always greatest before the crowd shows up. Stay sharp, stay disciplined, and I'll see you in the next one.